This is a pullback day trading strategy. In this video, I will show you how I use stochastic indicator for intraday trading. And for this, I'm going to go to indicators tab and search stochastic. And for this intraday trading strategy, we will be using a 5-minute chart. So after changing the chart to 5 minutes, it's really up to you if you want to use stochastic on its own. Some of the pro traders use stochastic as an entry signal on its own at lower time frame. After doing top-down analysis, they can figure out the trend direction. However, in our case, we will be using some helping indicator, and therefore I'll go to indicators tab and search exponential moving average. After adding exponential moving average, I will go ahead and change its length to 200, and I will consider it as our long-term trend direction on 5 minutes chart, and I can change its color just for easy identification. On top of that, we will also need another exponential moving average, which will be of 50 period length, and this one will help us to decide our short-term trend direction. So I will go to indicators tab and add another exponential moving average. Now to entry rules. When yellow EMA or 50 period EMA is below 200, we are only looking for short entries. Our entry signal will be produced by stochastic. We're not gonna enter based on stochastic cross. Similarly, when the 50 period EMA is above white EMA, we are only looking for long entries. And we will wait for the stochastic lines to cross below the 20 lines, and both lines should return inside the 20 to be considered as a valid buy entry. So generally people use stochastic crosses below the 20 line to consider a valid entry, whereas us we just want to make extra confirmation that whenever these two lines are pulled back within the zone of 20 to 80, only then we will consider it as a valid buy signal or sell signal. Here's the valid buy example which I wanted to highlight. Let's start with our first entry. As you can see, the 50 EMA line is above the 200, therefore we are only looking to go long. And right now the stochastic is still within the zone, and we are waiting for it to cross outside of the 20 zone, and then these both lines need to come back within the zone to consider it as a buy signal. So all conditions are met, therefore this will be our valid buy entry after this green engulfing candle, and therefore we will be going long here with the stop loss below the recent swing low, and we will aim for 1:2 ratio. Now we're going for the next trade, and we will wait for the proper cross below 20 line. As you can see, this is not a valid long entry because the cross did not happen outside of the zone. And the next cross is just below the 20 line, therefore we will still consider it as a valid cross, and both of the lines are back inside the zone, so we are going to go long here. Let's move to the next entry. It seems like this is not a valid long entry because the cross is still within the zone. So far we have taken couple of long entries. Now let's try some of the short entries. And the method to go short is whenever there is a 50 EMA below the 200 EMA, we are only looking to go short. And the way we enter short is we wait for the stochastic to cross its line above the 80, and these both lines have to come back within the zones. This is the market that you should avoid trading. Whenever the 50 EMA is always nearby 200 EMA and the price is not moving around, you should avoid trading. In this situation, if you will trade, your win ratio will go down.